Hi, everyone. Welcome back for the HFR Indices July 2024 Performance Snapshot. Joining me is Ken Hines, President of HFR Indices. Hi, Ken.
Thanks for having me on.
So it's been a very tumultuous week already. And as we look in the rearview mirror for July, how much of this did we see coming? What are your thoughts on the month that's already passed?
Yeah, we've seen a lot of the risk building in the last few months that sort of came to a head at the end of July and probably accelerated through the first few days of August. Really, a lot of the building tension had been driven by rising geopolitical risk. And what we saw at the very last few days of July and into the beginning of August is that you began to see a true inflection point. Large cap technology growth sold off, began to see weakening consumer data. And then to begin August, we saw the weak employment report and a significant market dislocation that hedge funds were navigating as July concluded and went into the month of August.
Okay, so let's look at our index data. What was the top performing strategy in the index space?
Yeah, event driven, the HFRI 400 event driven is really the leading area of performance in the month of July. You can see here with a gain of better than 3%, which is very exciting. July was a difficult month. It was a lot of different market cycles to navigate. But as we began to see a building M&A environment, but also investors pricing in interest rate cuts in the second half of the year, that's where we really saw some strong momentum across the event driven strategies. And then staying with the directional strategy, you can see equity hedge was also a leading area. You can see that fixed income based relative value was also a strong performing. And overall, you saw that the composite of all strategies gained about 83 basis points for the month of July. So that's an exciting month, obviously building into the month of August, which we just started.
And for the year to date so far, has that been true as well for the top performing strategies?
Yeah, I guess you could say event driven sort of lagged out of the gate. That's going back to the very beginning of the year, like January, February timeframe. So even though it was the leading area in July, it's not the strongest area thus far for year to date. That's still equity hedge. And there's a lot of correlation and a lot of overlap between those two strategies. But you can see here equity hedge with a gain pretty much in line with US equities in the 8.2 to 8.3% gain for the year in the first 7 months of the year. Overall composite, you can see, has gained 6%. And event driven has pulled into the second area of strategy performance with a gain of 5.4%. And you can see that macro has declined after a few months. It was really the leading area of performance coming into the second quarter. And then you've seen a few months of decline as commodity has sold off. And some of those strategies haven't done as well in the last few months. But it's going to be interesting to see how those macros, uncorrelated strategies do in the month of August, as we've seen obviously an inflection point in the market and significant dislocation to start the month.
Right. And so before we go there, let's drill down into the sub strategies. What did we see in July as a top performing sub strategy?
Yeah, one of the favorite strategies of all of the index users is activists. It's a very sensational, exciting area of the hedge fund industry. And so, not to disappoint, we saw a gain of over 7% in July. That was a bit of a reversal. This area did decline in June. Activist is a very idiosyncratic strategy. It can be very chunky returns, not always really correlated with what's going on in the broader equity markets. I mean, sometimes it is, but it's much more specific to the positions and the transactions than it is to tracking, 500 large cap stocks or something like that. But similarly, so you saw a strong gain there for activists in July. And you saw multi-strategy equity hedge gaining a little better than 2%. Same with multi-strategy and event-driven. Special situation, also a strong area of performance, up 2.7. So really strong performance really across directional equity and event strategies in the month of July.
And looking at sub strategies year to date, has there been a lot of shuffling around?
Yeah, it's really been a continuation of the trend. We've really seen the first 7 months of the year has been a strong time of performance for quantitative directional equity hedge strategies. You can see that's the leading area of performance. And again, those are kind of CTA like in that they're quantitative trend following models, but they're different from CTAs because they're not in commodities and fixed income currencies. They're only in equity hedge. You can see also healthcare and technology. That's not very surprising that those have been leading areas of performance thus far for the year. But as you know, we have seen that area of the market come under pressure in late July and early August. And so obviously there's still a lot of trading time to go before we conclude the month of August. But it's going to be interesting to see how those strategies are positioned for this much more volatile market environment that we're seeing right now.
So looking ahead into August, which are the indices, whether top level or sub strategy, that are most interesting to you?
Yeah, I think it's the two things that I'm looking for in terms of market developments are obviously you can't get away from the election and the geopolitical risk. I guess geopolitical risk really encompasses the election in the US, elections which are ongoing in Europe, and certainly ongoing military conflict and everything associated with that from the impact on supply chains and other things. And then the second thing is the Fed. And what we've seen is kind of an amazing inflection point where all of the attention has gone from concern about inflation and ongoing inflation to, in one fell swoop, concern about recession and almost the polar opposite extreme of concern. In a couple days time we saw that shift. It could shift back. You could see revision to that, and that means that the strategies that are most sensitive to those areas, really it cuts across all strategies, but certainly the relative value arbitrage is the most interest rate sensitive. Certainly macro is the one probably most or lowest correlated with equity markets and usually favorably disposed towards the kind of volatility that we've seen in the last few days. And then certainly equity and event are sensitive to the lowering of rates and the adjustment of expectations for broader economic growth. So it's going to be an interesting month. It was an interesting month of July. August is going to be interesting, and we're looking forward to a very exciting second half of 2024.
That's right. So we will see you later in August, and hopefully you can tell us a little bit about our investor guidebook before we.
Yeah, please visit the new website. We've gotten a lot of great feedback on this in the last couple of months, www.hfr.com. When you get there, please check out the investor guidebook. It's a great resource for institutions and to hear about the many different ways that institutions are using HFR indices. You're watching this video, we do regular performance updates of the indices at least 3 times a month now, sometimes more, on our YouTube channel. So please subscribe to the channel. And if you have questions that you'd like us to address in other videos, please feel free to add those there. And then finally, if you want to set up a call to talk about anything that you hear in this video or anything that you see in the investor guidebook, you can reach out to me, Ken Hines. Reach out to any contact at HFR. Everyone knows how to get a hold of me. Or you can send an email to indices@hfr.com.
Thanks so much for joining us. Thanks, Ken.
Thank you.